All right, good morning. We're going to go ahead and get started. I'd like to start right on time for you, and then we'll also end on time, which everybody loves. Welcome. I'm Julian Shelbert, Senior Vice President at Great Falls Development Authority, and we are really pleased to have you all here in person, and those of you that are online, welcome to our Housing Production Summit. Really to continue this conversation on housing production that's been occurring all over meeting spaces and kitchen tables for many years, but it's hit that critical point where we need to address it as a community. So my role with Great Falls Development Authority is business development and helping lead our team. Before we get started, I would like to introduce the other GFDA team members that are here. First off, Jake Clark with the business development team, who really put everything together. Thank you so much, Jake. We have Lindsay Bruno, who's our content marketing director. We have Jen Gallmeyer, our investment director, and Christian Linehauser, everything downtown development. So just for thank you. I think that we don't applaud ourselves enough. Thank you. Just for a little bit of background, and for those of you that might not be super familiar, GFDA is the economic development team that works to build the Great Falls region. We're not just in Great Falls, but the 14 counties surrounding Great Falls. And that work is really focused on anything to do with business. So we are the ones that are we'll work with several hundred startup businesses this year, people with dreams that want to do a litmus test on their dream and see how far they can take it. And we help them through every stage of that to opening their business. We work with existing businesses. This month alone, we've already spoken with 180 existing businesses across the region, helping them identify problems, solutions, opportunities, and linking into partners. Many times we're just listening and then saying, you know, have you talked to this person? And that provides enough of a boost that there's more jobs created. We work with businesses that are looking to move to our region, and we help them with a soft landing. We also work on competitive improvements, like the housing production. We work on talent attraction, workforce and housing. You're gonna be shocked when I say this, but those are the two key areas of concern for every business that we've been meeting with for the last couple of years. Workforce and housing. The chamber they've launched a workforce initiative, and I saw Scott is here. Scott Wolf is heading that initiative with the chamber here. And so we partner and they take lead on that, and then we partner wherever they need some assistance there. So this conversation today is so important. As you'll hear, we like to start conversations with data. So we will hear from the Concord group, whom we brought in to do a robust study of our community. Johnson Economics did a similar study in 2015 at the city's behest that we really were able to utilize to get in front of developers, and lo and behold, we landed the Farron Group and we landed other apartment projects. It was time though for us to present developers in our market and externally with some data that will give them confidence in the market to build the much needed housing that we all know anecdotally, but the data really speaks to that. So we'll hear from the expert, Adam with the Concord Group. We will also hear from developers that are working on projects in our market, what they're investing in this year, what will be going on this year. And this is not a comprehensive list, but some that wanted to share their projects with us today. And then we'll also hear from employers on some demand. Because while the Concord Group study was very comprehensive and holistic, it did not include some of our employer growth that is happening now that will spark even more need for housing. So that's the summary of the day. We will have, that's a summary of 90 to 120 minutes. We will have opportunities for dialogue and questions, and then we'll present you with an opportunity to continue this conversation. Because we at GFDA are very action oriented. The next step is, okay, well, let's figure out how to get this housing in the ground. So that is a look at the day. I'm really pleased though to introduce one of our partners on this. When we brought in the Concord Group, we had two organizations that helped us fund this project. That was the Great Falls Association of Realtors and NeighborWorks Great Falls. And both of them are here. So thank you very much. Thank you.
I am so proud because how many, raise your hand if you're in the Realtor family. Awesome, look at, woo! I think we have outvoted today. Good morning. We appreciate the opportunity to be partners with the Development Authority and with NeighborWorks to bring this study. It's a long time overdue and we appreciate those partnerships. Before I have the pleasure of introducing the consultant today, I do want to share with you some of the statistics that have happened in the last 2 years since that wonderful pandemic hit us all across the world. So here we go. The 2020 pandemic impacts. Very few to zero open houses took place in 2020. Showings were conducted via video or live Facebook. The median price in January of 2020 in Great Falls was $180,500. In December, it went up to $211,500, which is a $31,000 increase that year. Inventories averaged 1.5 months. Inventories on the average prior to the pandemic, 1.8, might have been 2 or 3 months. So it's going to be interesting to tell you how that changed here in a second. Days on market, highest was in February at 65 days in 2020. It decreased each month to 27 days in November of 2020. The percent of list price received averaged 99.2. And in a typical year, it would be anywhere from 97 to 98 to 99%. What does that mean? That means that the realtors are doing a really good job of pricing those homes because the offers that come in are at the list price. They've done their comparables and what have you. So we like to watch those numbers, and realtors can use those to benefit themselves as well. So the percent of list price received averaged 99.2%, which is about 1% higher than normal, indicates what was to come in 2021 with the dollar value of offers being made and accepted. So let's fast forward to 2021. The lowest median price for 2021 was in February at $217,750. So from December of 2020 to February, it rose $6,000. The highest median price was $265,000 in November. The average median price between 2020 and 2021 increased by 15.2%. Inventory levels averaged 0.4 months, which is a 75% decrease over 2020. As fast as houses came on the market, they were under contract. It was not uncommon to have 10 plus offers on every home and listings under contract the same day. Days on market in 2021 started at 45 days in January, and we're down to 11 days last August. June, July were 12, 13 respectively. The days on market were up to 23 days this past December. The low days on market were a result of cash closings for thousands of dollars over the list price. The percent of list price received was over 100% for 9 months in 2021. In June, the percent of list price was up to 102.5%. 2021 was the year of the investor and out-of-state buyers, who were primarily responsible for those cash sales. The result has been a negative impact to our first-time home buyers and local residents looking to upgrade to their dream homes. They just couldn't compete. So what's trending in the last 60 days for 2020? The median price as of February 28th was $266,000. The inventory is at 0.3 months or 27 listings. The days on market are up to 52 days. Does this mean cash buyers have slowed or gone away and buyers are now financing their purchases? Or maybe does it have to do with our economy? Percent of list price remains over 100%. Great Falls has always been a very affordable market in comparison to Butte. America is probably the only place that has beat us in several of the different housing studies that have taken place in the past. But the housing production study being presented today is going to identify most of what we already know, that we need housing. You didn't come here to listen to me. You came here to listen to this wonderful presentation. So with no further ado, Adam Seidman is a principal of the Concord Group. He has over 15 years of experience advising developers, investors, public agencies, and financial institutions. Over the years, he has worked closely on a diverse set of residential and commercial projects, including workforce and affordable housing, mixed use, urban fill developments, downtown redevelopments, master plan communities, and resort destinations. Adam has an expertise in market, economic, and financial analysis associated with existing properties, as well as development opportunities. He has provided consultation to owners and operators of real estate on hundreds of projects regionally and nationally. Outside of his client engagements, Adam is actively involved in the Urban Land Institute, participating in the Northwest Next Group. Please welcome Adam Seidman.
Great. We're gonna hire you. Good with data. I have it on good authority that the weather is usually not always this nice. Okay. This is my second visit out here, and I think both times have been 50 degrees. There we go. So appreciate the interest, Airy. We were back here, when was it? In late summer, early fall, to do our analysis, site visit, meeting. We met with actually a number of people that are in this room today. Then we did a lot of desktop research, looked at a lot of data, put a lot of stuff together. And we delivered a hefty report, right about this thick. If you print it out, it's 160 pages. We're not going to go through 160 pages worth of data today. So, okay, we'll try to get through some of the highlights and have some room for Q&A. I assume that the report will be available for people that want to actually dig through the full data. And my contact info is available here and through the group that put this together. So I'm always happy. It doesn't have to end here, right? If there's questions that come up after this, that's fine too. And I'm always available. I am from Portland, Oregon, not originally, but I lived there for 13 years. So any requisite, razzing, get that out of the way now. It's interesting to come here with we just lifted masking for our schools in the Portland public schools. So it's like I'm trying to, as I travel, I try to figure out what the deal is in every place. Uber just made me, makes you agree now to wear a mask. And the last couple of Ubers I took in Montana, they just asked, "You okay with no mask?" I said, "Well, we're in Montana, right?" So I think I could get used to this place. So I will start off by saying a lot of places are not doing this. Are not doing housing studies. And you might think, well, they don't need them. And that's actually not true. I mean, there's a housing shortage really around the country, in big cities, small cities, medium-sized places. So kudos to the group for putting this together, because I think this is really important. Why should you listen to me at all? Maybe you shouldn't, but here's some background on who we are. So as Terry said, I'm a principal at the firm. I started about 15 years ago with the Concord Group. The firm's been around for 25 years. We have offices across the country. We just opened an office in Austin, which I just came back from. So I got to see the whole Texas craziness recently. We work on about 800 projects a year around the country. And the majority of our work is actually for private sector folks. And so part of the appeal, I think, for like an economic development group and the group that brought us in, to have us come on board is that we actually a lot of times work with the developers, owners, investors that you're trying to target. And we approach this housing demand assessment in a similar way to the way that we would do for them. So it's not like we're doing one kind of analysis for cities and counties and another type for developers. It's really the same type of work. And I think that's part of the value add that we bring to the table. So we do a lot of work for developers, home builders, but then we also work in public-private space, public sector, a lot of financial folks out there as well that are actually investing in projects around the country. So we responded to a request for proposal that the group GFDA, GFAR, and NeighborWorks put out, and we completed our work in December 2021. Our scope of work included an assessment of the key housing trends and demand drivers, and we looked at the MSA, which is Cascade County, as well as a 13-county area surrounding it. As I mentioned, we came into the market. We spent about 4 days here, a couple of us, getting to know on the ground what's happening here. We had done quite a bit of work in the Intermountain West, including Montana. That was actually my first time in Great Falls, which was a really interesting trip and very eye-opening and very informative. We met with key stakeholders in the public, private, and nonprofit sectors. This included city, county, nonprofit, employers, developers, brokers, property managers. We did some site visits for some of the newest properties. We drove around. Brett from GFDA drove me around really the whole county. So that was pretty neat. And what we provided in the big report is we did an assessment of the current housing market. We projected demand for housing. Now, when we say housing, that's two types of housing, really. It's rental housing and for sale housing. And then within each of those groups, there's a lot of different types of housing that we looked at. And then we developed a potential menu of housing types that we think could work in this market. And then again, we're going to talk about the summary here today, not all the details. So I want to go through the key findings. Okay, key finding number one, there's definitely demand for new housing. I think you all know that, right? You know that there's demand for new housing, but how much? Demand for how much new housing? Because this is the big question that we get from a lot of our clients in the private sector, especially. How much demand is there? We see demand over the next 10 years for about 4,500 new units, about 450 a year. But over the next 10 years, there'll be about 4,500 units of housing. And when I say unit, that could be a single family house. It could be an apartment unit. It could be a rental townhome. Each one of those is a unit. You can see here, rental demand, for sale demand, kind of evenly split in terms of the way we view it. So basically this is year in and year out, you should have demand for about 1,900 rental units of any type and about 2,500 units of ownership product or for sale product. That demand is across the spectrum. It's not evenly necessarily across the spectrum. We see that demand relatively across the spectrum. There's demand for affordable housing, especially for rental. That's the blue bars. Okay. There's demand for what we call workforce housing. That would be in the 70 to call it 110, 105, 110% of AMI, area median income. And this is kind of a critical piece in terms of what we analyzed in our report. And there's certainly demand for market rate and housing for folks that at higher income levels. Okay, so this is looking at demand by income level, and these are household incomes. So you could have two people making $25,000 each that actually put them right in this workforce housing. You have one person earning 80K, that puts them right here. So you can see that there's a lot of the for sale demand we see shoved towards the workforce and higher income ranges, and we see a lot of the rental demand actually relatively across the spectrum. So what's driving this demand, right? Because just saying there's demand, well, what's this based on? So for us, we looked at demographics, we looked at employment, and we looked at in-migration. We put a model together. We look at historic trends, and we look at projections that both we make as well as third parties make, and that's what drives our demand model. Again, 4,500 units over the next 10 years. But these are really the big drivers to concentrate on. So job growth is going to be a big deal, right? If that happens more than what we have here, you probably have more demand than we're forecasting. If it doesn't happen as much as planned, you'll probably have less demand. It's probably the most major factor here. Moody's, which is a third-party economic group that does projections all over the country, and they're quite good. They're not, no one has a crystal ball, but they're quite good, and they revise basically daily, right? Their PhD folks will revise their estimates daily, weekly, so we get the most up-to-date estimates. They're projecting 2,000 new jobs in Cascade County by the end of 2026. And about half of those are going to be in eds and meds. So basically healthcare and education sector. That's so pretty big chunk actually in that sector. Some of those jobs coming back by 2026 are also jobs coming back that had been lost. But some of those are jobs that are different than the ones that were lost, right? Because we lost jobs, I mean, just like every metro did basically in 2020. So 2021, you mostly got those jobs back, but not quite. So there you're still kind of getting those jobs back. In migration, this is probably what everyone talks about, right? In terms of whether it's good or bad, right? But in migration, people coming to live here, really because there's a high quality of life and it's relatively affordable. In fact, when you look at all the Montana metros, this is the most affordable basically of all the major Montana metros. And Montana already is affordable compared to a lot of other states, right? So you're getting, you kind of have like two groups because of that. You have folks like me coming from Oregon, we're like, Montana's cheap, right? But you also have people in Montana that are saying, well, we're priced out of Bozeman, right? And this is that next frontier. So you have kind of two groups of in-migration actually, people that are locals, Montanans, and then folks that are not locals, that are from out of state. This is a really big point here, this last one. Old housing stock. Old housing stock. By far, Great Falls has the oldest housing stock of any of the Montana metros. This is for rental housing stock and for sales housing stock. That's not necessarily bad, but what it does mean is that there's opportunity to build stuff here because of this. You get product that gets functionally obsolete, right? That can just get old. The floor plans may not work. We were just talking to a broker investor here about, when we bought our house in Portland, it was a 1950 build, cute house, Cape Cod style. Only one family had been in there before. We came in, we're like, well, we got to move this wall, do this, make some changes, add some space. That's what people do, right? The new generations want different things. And 70% of your housing stock here is built before 1980. So just saying there's demand in a vacuum doesn't really tell you that much. A big part of our analysis also is looking at demand versus upcoming supply. And is there a gap? And our analysis says there's a pretty big gap in terms of demand for housing. This is rental demand. This is for sale demand. And then this is future supply. Okay, and by future supply, we mean projects that are under construction or planned, right? So we get some of those apartments that are under construction right now. Those go into the future supply. Okay, we're showing a gap of about 900 rental units and about close to 2,200 for sale units over the 10-year period. So pretty substantial. This probably undercounts the gap actually, because to be conservative in this particular analysis, we're actually assuming all the units that are in the pipeline get built as planned. And usually we don't do that. We don't make that assumption. We usually give them a haircut. We usually say, okay, well, of all the units that are going to happen, something's going to happen. Maybe they don't get financing. Maybe something happens with permitting. Maybe they just get sick of doing development. And those projects don't happen, at least as scheduled. So it's very likely that this supply actually goes down, and meaning the gap goes up. Some of the benefits of new housing production. Okay, so one big benefit is that we can free up housing units for folks in that either workforce price range, income range, or below. Right, and this is connected actually to the second point, which I'll make in a minute, but there is a need for housing here, right? And there's a need for housing really across the spectrum. It's hard to build housing at lower price points. It just is. Affordable housing, like with a capital A, is subsidized to a certain extent. So you can typically do affordable housing, especially affordable rental housing. There's a framework for doing that, right? NeighborWorks has, I think, a really innovative program, for example, for even ownership affordable housing, which we got to see. But it's hard to build. I mean, it's hard to make the numbers work. It's almost impossible to make the numbers work in what people call workforce housing, because there's no subsidies for it. And with everything getting more expensive to build, and it's still expensive to build out here, right? Because we're still, you still got land costs and permitting costs and construction costs, which are way up. It's hard to hit price points for people that are especially under 50 to 75K in this market. So freeing up housing units is going to be an important thing for new housing production. There's a pretty big mismatch, and I'll show you a graph in a minute that hopefully it displays a little bit better than the words, but there's a mismatch in this market between what people make income-wise and what prices are. And part of that mismatch seems to be forcing people that can afford higher priced housing, whether it's rental or for sale product, to actually settle for lower priced product. And maybe older product. And one of the effects of that is it's probably boosting up the pricing of that product. And so it's making it even more unaffordable for people that are in those lower income ranges to be able to find any kind of housing. And I'm not telling you guys anything you don't know, right? If you're in this market, you already know this. The very first conversations we had were people telling us this, right? But our data also is showing this. Another important point about new housing is it can force upgrade of housing, right? So you have older housing stock, that's not necessarily bad, but you want people to do what we did to our Portland house. You want them to rehab and upgrade it, right? Whether they own it or rent it, or going to rent it out to someone. This is the graphical display of the mismatch. So this is the rental world, and this is the for sale world. It's a little bit more clear actually in the for sale numbers. I'll focus on that. The blue squiggle is what people at various income ranges can theoretically afford if you were to spend 30% of your income on housing. And I know that not everyone does that or wants to do that, but it's a way to look at the numbers. So that's this squiggle. The orange line is what the housing supply actually is in terms of dollars. Okay, so this is like under 300,000 bucks. This is 300 to 470K, and this is 470K and up in terms of home prices. There's a big gap in terms of what people can afford and what's being offered in this market. Okay, so what's happening is that people that can afford this, there's no product here, they're going here, right? They're going here, and then it's shooting the prices still way up compared to what maybe they otherwise quote would be in a kind of a market where there's a better balance in terms of the demand and supply and the incomes and the prices. This is some data. It's hard to see on a screen like this, but this is the data around the age of the housing stock. So again, this is rental, that's for sale. You can see about 70% of both rental and for sale of the housing stock built before 1980, and a really, really small percentage in Cascade County, like 5 or 6%, has been built since 2010. And you can see, Billings close to the 50 to 55% basically. Bozeman, 28 to 36%. This is for housing built before 1980. Missoula, also in the 50% range. So you have much older housing stock than basically all of the quote unquote competitive metros out there. Some considerations that are certainly worth noting here. We mostly see demand going forward for the type of housing that you already see here, right? Most of the housing we expect to be built here is probably similar to what's already been built here historically. But there's probably also going to be opportunities for products that you're maybe not seeing that much of, if you can get the number, if developers can get the numbers to work. That could be townhomes. I know there's been a few built, but there's not that many. Condos, like single-story condos. Podium product, that's like when you have a concrete base and you have wood framing on top. Single-family rentals. That's been a big product type around the country that we haven't really seen much here. Those are built, basically purpose-built as rental single-family homes. Okay, and tend to be a lot smaller than the product you'll see on the screen. This is a pretty big point. I mean, again, we work with a lot of developers and investors, and they'll come back to us, well, we can't make these projects pencil. We can't make these projects pencil. That's going to be a real consideration here, right? You can talk about demand kind of all day long, but if they can't make, if developers and investors cannot make the numbers work, you won't see things get built, right? And so certainly there's going to be cost realities for developers out there that make certain housing development just not happen either at all, or at least in the near term. I can tell you that with construction costs the way they are nationally and certainly regionally, it's going to be hard to get like higher density housing probably to pencil out right now, right? Just everything has gotten more expensive, everything, right? Concrete, steel, lumber, everything. I mean, that's not even talking about labor costs. So what we did towards the end of our report is we put together a menu of housing types for both rental and ownership products based on our demand. So you can see again about 1,900 units of rental product over the next 10 years. And we see that demand across the spectrum. We see it for affordable housing. Okay, that would be in this case for folks in the 80% or below of area median income. We see it for your more traditional walk-up or garden style apartments. which would be basically all built out of wood. That's kind of what you see being built here historically and even currently. Some of the single family attached and detached rentals, we certainly see demand for that here. And then maybe for podium apartments, and maybe this never happens quite like this, and maybe it just becomes a four-story wood frame if they can't get the numbers to work. But this is how we could see it breaking out. And you can see that we see rents ranging from, I mean, affordable housing is kind of limited, right? It's got regulations around what you can charge. But for the non-affordable market rate product, we see rents ranging from probably, just under $1,000 a month to basically about, over 2,000, could be 2,500 bucks a month, right? So we see demand really across the spectrum. But you can see it, a lot of the demand in this model is going to come out in this garden style apartments and the affordable housing, right? Again, a lot of the product that's already been built here historically. In the for sale world, we see demand mostly for lower density, although some demand for higher density. So we see some demand for, we're calling it courtyard condos. I mean, this would be, again, condominium, single story condominium product. Duplexes and townhomes, we see some demand for that as well. Pretty large chunk though of the demand we see going forward in this market is going to be for detached single family product. And a lot of that's going to be it's going to be a mix, but a lot of it's going to be concentrated on what we call the large detached single family product. So again, just kind of going back to this, I mean, in the for sale world, we actually see demand building for this and freeing up housing that they're taking up right now, right? I think that's a pretty important consideration because you might not be able to build like profitably if you're a builder out there here, right? So if you can build to this part of the spectrum, I'm not saying you got to build all $1 million plus, but if you can build 500 to 750K for sale stock, that frees up housing, right? That moves folks into that type of housing. Certainly there's going to be people coming from out of market as well, but it does also move people around and it should free up some of that stock, right? Because it's going to be really hard, to be honest, to hit these price points here in that 300 to 450K range that we have outlined there. It'll be really hard. We see that's where the demand is. I still would come back to this point that the development cost realities may not make some of those happen, right? So these are potential menus. And again, this is the type of menu that we would put together for folks in the private sector. When they come to us and they say, look at the market, what's possible, what can we do? We do exactly this. We put this kind of menu together. So that's it. There's about 120 more pages that you can see in the report, but Jake said I couldn't show you all of it. I mean, a lot of it's supporting data, right? You don't have to read all of that stuff. A lot of it is reflecting back to you already what you know, right? Who are the major employers? What's been happening? What are the trends? What's happening demographically? Some of it you might not know though. And I think there's certainly some interesting info in there. Some of the most interesting data you'll see out there is going to be around migration patterns, right? I mean, that's going to be something that this county is going to keep talking about. Who's coming in? Where are they coming from? Who are they? What's their demographic makeup? How much do they make, et cetera. There's some good information in there, certainly on that. It's always going to be outdated, the migration pattern data, but I think folks will find that very interesting. Again, I'll be here for some Q&A today, but if folks have questions after this, doesn't matter what the questions are, I'm always available to talk, and I like this stuff. So feel free to hit me up.
Great, thank you so much, Adam. Really.
Yeah.
So I'm going to kick it off with a question that came in online. Somebody would like you to delve a little bit more into the difference between workforce versus affordable.
Sure.
Those definitions.
Sure. So affordable housing historically has meant it means something very specific. Affordable housing is the kind of housing that goes up to either 60% or 80% of area median income. So area median income here is 75K for a family of four. Look at it. Close. Less. Okay. 55. Okay, so 55K. So you can take a percentage of that, and that applies to basically how you make the calculations. Workforce housing, the way we typically use that term in our work, is that next tier that almost always is not subsidized. So it's usually 70 or 80% of area median income to usually about 120%. And when people talk about it, they say, oh, it's like, it's nurses and teachers, et cetera. But honestly, it's a lot of the workforce. And I think in a market like this, it really is a lot of the workforce. So it's a lot of folks basically making in that, here would be probably, for a household would probably be what, 40K to 70K. I mean, maybe I'm a little bit high on some of those numbers, but I think that's what we're talking about there. So again, in terms of the challenge to build to that, for more traditional affordable housing, there are subsidies, low-income housing tax credits, and other mechanisms that especially the federal government has to allow that housing to happen. It's still challenging to build, but there's at least financial mechanisms to help offset the development costs. For workforce housing, there really isn't. There's been some movement on that a little bit, but there really isn't any real mechanism for helping build workforce housing. And so it kind of gets stuck in the middle. You have housing types that are built to the part of the right part of the graph that I was talking about. Folks in this case making over, let's say, 75K a year, households making over 75K. And then you have mechanisms for people making under 50K. Right. So people get stuck in the middle, 50 to 75K, or 40 to 80K, probably more realistically in this market, where there's just not mechanisms out there to really build housing. And usually the numbers don't pencil for the private sector to build housing for that group. Sometimes they can. And in this market, there might be opportunities, but it can be really challenging.
Great, thank you. Questions? If you raise your hand, we'll go ahead and call on you.
I won't bite. Very
You are seeing some incentives for this is to make it easier to build. What are some of those examples of, the workforce housing is getting some kind of help?
Yeah, so one change over the years has been that the federal government changed the requirements. And there's some housing you can build up to 80% of area median income. So that's been one change to help for workforce housing between 60 and 80%. That's on the national level. So there are some mechanisms that start to eat into the workforce housing and what we still call affordable housing. There are other things that municipalities are trying to do for workforce housing. I'm not sure they've worked that well, but zoning changes have been some, right? Where they look to make changes to zoning to allow for higher density housing production. Basically saying, okay, like maybe we don't all want big single family homes. Maybe we need smaller homes. On the private sector end, actually, there's been a lot of movement. It's building small units, quite honestly, building small units. I hate to say it, no one likes to talk about that, but the economics tend to be that if you can build small, you can still usually get a very good return as a developer or an investor on a per square foot basis, let's say, but you can have a nominal amount, basically your chunk rent or your chunk home price, that still can be kind of affordable. So I think that that's another mechanism that we've seen certainly the market take, right, to try to meet demand for that. But I would say that it's a question. This question around workforce housing comes up across the country. I have not seen anyone that's solved it yet. So I do think that I think like what NeighborWorks is doing, for example, is very innovative in what they're doing with the USDA grants. And so I think you have models actually right here that I would use for other markets to look at. So I think you have some good examples here of things that can happen already. Sure.
Yep, right in the back.
So was there also something that you guys did to see if Great Falls needed more 1 bedroom, 2 bedrooms, 3 bedrooms? Like what would we need more of?
Yeah, that's a great question. We didn't get like too specific in terms of like we need X number of 1 beds or we're too many on the 2 beds. There aren't a lot of smaller units here, right? On both rental and for sale. And so we would say there's certainly demand out there that's not being met for like studios and 1 bedroom units, especially, or one bed dens. I mean, I would say that was pretty consistent across the data that we looked at. So, which again, if you tie that to the age of the housing stock, that makes a lot of sense, right? Older rental product tended to be a lot of 2 bedroom product and up, especially in like a more suburban oriented design, which is what you basically have in Great Falls. And certainly ownership product, if it's going to be single family or product like that, it's almost always going to be at least 2 bedrooms, right? So if, I mean, the age of the housing stock can already tell you what you need to know by that. But yeah, certainly there's room for you need more diversity of housing product types, period. And I think the smaller units like you're getting at there, there's certainly demand for that.
Jason.
I actually have 2 questions. So
You're
kind
allowed.
of bear with me. I have this idea that I've been kind of floating around the community, but I'm curious to know from your input, have you done any research on affordable housing for, I like to call us our seniors? For me, I drive through our community and I look at all of the seniors that are living in their homes that have 4 bedrooms, and that is great housing that they're not fully occupying. So I'm curious to know more about the condo or the townhouse, the accessible home that could be built for the seniors. And if we move them, myself included, into that kind of housing, then we can open up family housing that's already been built around our parks and our school districts. Because every time we keep going further out, we're putting infrastructure burden back on our community as far as school. And then the other question I have is, have you heard of any communities that have worked with their city? And I apologize to Craig in the room as I say this, that we just go ahead and we rezone things, rezone neighborhoods. Maybe blanket rezoning that says, instead of being just R1, we're going to allow for multi-use. And would that attract more people or more developers, or would that fill a need?
Yeah.
Great, so the first question was in regards to senior housing and more townhome condo type products to move seniors that maybe don't want to be in the neighborhood 4-bedroom anymore into a lifestyle product for them. And the second question was on the potential for communities to blanket rezone or other rezoning that might move from just a single family use into a mixed use type environment.
Yeah, so great questions. Easy answers, of course. I mean, to the first question, 100%. So like underlying the menu, housing choices we have here is exactly what you're talking about, right? It's looking at, it's not just saying like, okay, income and housing type, it's saying, okay, who, right? There's singles, there's couples, there's families, there's empty nesters. Empty nesters are also singles and couples, by the way, right? But it's a different type of single and couple, right? Because they're at a different stage of their life. And so for folks, let's say over 60 or 65, right? There's going to be a lot of different paths that we'd want to look at here, right? I mean, there's kind of like more traditional senior housing, right? Where someone moves into either independent living or assisted living, which is not what you're talking about here. But that's a type of senior housing, right? Which is probably needed here. We didn't dive into that particular band of housing here, but independent living, assisted living of different sorts, there's a big demand all over the country for that, certainly here as well, right? But what you're talking about is, okay, like lifestyle choices and then freeing up housing that maybe someone's, a family's lived in for 40 years. And that's a big deal, right? Again, it's talking about, so it's not just about providing, more expensive housing and getting people into housing, it's providing other housing choices. So 100%, like that's, if you look at who actually would occupy like a high density rental in this town, it's going to be actually that type of target, right? Because it's not just someone buying a townhome or condo. A lot of times what we see when folks over 60 or 65, when they decide to move down around the country, a lot of times they're moving down and renting because they have a big chunk of equity that they built up, and they may not want any maintenance hassles with any type of housing, and they may not want to deal with just owning, period. So it feeds the demand for actually both ownership and rental product. And it's not like too much of a stretch to imagine like higher density product along the river here, for example, that would be appealing to folks across the spectrum, but especially to folks that have lived here their whole lives, want to move down from their kind of, their 4-bedroom house and don't have any choices right now. So by having production, you certainly, you give folks a choice and then you do free up that housing. To your second question, there's a lot of municipalities that are going through this zoning question right now. Portland's a good example. Portland actually just made a very big and maybe somewhat controversial zoning change where they rezoned like all of the single family housing neighborhoods into higher density. The result is it hasn't yielded much yet. And partly that's because home prices are so high. So for developers to come in and buy and make any sense of it and make use of it, they have to be able to still make it pencil. So I think in a market like this, where home values and land values are still relatively low compared to a lot of other markets, I think there could be a lot that could be said for looking at rezoning, right? Because you may not, if your only opportunities to have high density housing, for example, are just in a very small band, right, of the city, and certainly of the county, then you might be giving up opportunities. So I don't think it's like the silver bullet at all, but I do think it's another tool that certainly folks can look at. And again, municipalities certainly are looking at it. And you have even these bigger cities like Portland and Minneapolis that have made some pretty big changes to zoning. I mean, these are, I don't know of any other cities of their size that have gone through this exercise and decided to do that. But again, so far, at least in Portland, it hasn't yielded the type of housing that I think they want to see because of home prices where they are.
Adam, as a follow-up regarding townhomes and condos, and the lenders or the realtors can tell you this, is that the financing is different for those products. And then you got on top of it, you've got your homeowner association. So there needs to be some changes in the banking world, as well as, homeowner associations are very unorganized in Montana. We talk about this with the Realtor Association all the time. You're lucky if you can find the information, and the realtors do their best to inform buyers of homeowner situations or HOA things, but it's a different product also to finance than it is a single family home. So that has something into play as well into to sell it.
That's true. I mean, even like condo product, which you haven't seen built here yet, in other markets, typically a lender will require pre-sales, for example, right? So you can't even get it financed until you already have commitments for like 50+% of the units. So condo development is a much trickier deal. Townhomes are typically a little bit easier, depending on how they're structured legally. But you're right that like the financing for those as the person buying it can be a lot more challenging. So sorry, you had other stuff to go to say.
No, I was just gonna say, the year-to-date sales for townhomes and condos, I didn't give this stat when I was up earlier because I was doing single family, but there were only 123. That's 10 a month in Great Falls. So part of that was people didn't want to move. And again, people are deciding if the cost of that is the same as a single family home, which one do they want to go to, and then pay up those extra fees on top of it.
Right. I mean, and that's why I mentioned like the river as a location for higher density. Like you gotta have a value proposition for people moving from essentially maybe even laterally price wise from a single family to a townhome product, right? It's gotta be that you are near amenities that you want. Maybe it's walkable, right? Maybe it's just that it's new and it has a lot of things both within the unit and within the project itself that make it attractive. I mean, this is what we're seeing all around the country with all these, new apartments that are built. Right? I mean, they're offering, and it's happening here too, with some of the newest apartments, you offer amenities, you offer a reason for people to go, and they're voting with their wallets. They are paying for them.
Well, we're building mini communities within those
Yes.
subdivisions so that they don't have to go outside of those subdivisions, even if you have traveled to Billings or some of the other areas where commercial's on the bottom, the townhome or condos on the top. You go downstairs and you can have your cup of coffee or your lunch or, whatever it is. So it would be great if we could see some of that product here, but can we pencil it?
Yeah, I mean, I think you can, just depends on, there's gonna, the answer is yes, right? And you've already had some people locally here, I think, make at least some projects pencil.
Yes.
You talk about that missing middle that sometimes doesn't have the same types of subsidies. What have you seen that maybe have been incentives that city government have tried to do to incentivize development that helps things along in pencil?
Could everybody hear that?
Yeah, that's a great question. I mean, there's different types of incentives that we see cities offer. Bonus densities are kind of a common one, right? Where you can get increased density for your development by doing certain things. It could be for including a type of, affordable housing or workforce housing. It could be by offering like green building, technologies in the building type. It could be for having lots of bike parking, depending on the market you're in, right? I mean, there's lots of different ways that they do that. But typically offering a developer the opportunity to come in and basically increase the density beyond what is allowed baseline is certainly one way that we see that being incented. And what we're seeing increasingly, like this is happening in like Washington State, is we're seeing cities there trying to tie it to workforce housing as well, not just affordable housing. So if you can if you can tell a developer, hey, if you do 10% of your units, let's say, or 20% of your units as workforce / affordable, then you can get this bonus. That's certainly a pretty easy way that some of these cities are, not easy, but it's a way that cities are operating to try to incentivize. So you can give them, so you can give them added density. Another thing is property tax exemptions is a big deal. If you're gonna, this would be for like a rental product specifically. But if you're gonna be an owner of an apartment community, your biggest operating expense by far is gonna be property taxes, right? So property tax exemptions. We have property taxes here, right? I was like making sure. I was getting nods, but then I was like, okay, I was like, he doesn't know what he's talking about. It gets confusing with all the taxation. In Oregon, we have no sales tax. In Washington, there's no income tax. So everyone's got property tax, but property tax abatements are or exemptions are another big way. And so I was just talking to a city in Washington State just last week about this, where they're looking to incentivize development. There's a mechanism that the state has there already in place that allows the cities to do it. Not every city takes advantage of it, but the ones that have definitely found that it has led to more affordable housing. Again, I'm mixed on it because some of, you get different responses depending on who you talk to. But it does seem to have certainly created affordable and workforce housing that otherwise wouldn't have gone in. So I think those are kind of relatively easy ways that you can look at, and there's models for that.
So seeing no other questions right now, I'll let you think about your questions for a second. I'm curious as to some best practices that you've seen other communities implement. I think the property tax abatement incentive is potentially a really great strategy, but what are some other great stellar communities that we should be looking towards and digging in?
Honestly, I think the most important thing you're doing right now, which is actually doing this kind of work, right? Like focusing on, okay, what's the data telling us? What are some, what are outside people actually having to say about this? Getting your community together, people of all various types. I mean, I think this to me is a very big deal. I think that one thing that's hard to maybe to overstate is that it's hard to get developers and investors' attention right now. Folks are busy. Everyone knows real estate's, kind of through the roof, especially residential real estate, right? It's through the roof nationally. It's hard to get their attention. So, and you don't have a ton of local developers and builders, right? So I think that to get to the numbers we're talking about, I think you're gonna have to have outside developers and certainly capital guys, right? And on the investment end. And so I think that this is a good start, right? Other communities that I think have done a good job of attracting investment have also had good online presences. So having like a good portal where everyone can go and see pretty much everything. And so I think you already have a lot of good stuff on like the GFDA website, but maybe there's a need to have like a branded site for for Great Falls development or something, and that could be the repository for the different reports and information, obviously, but it's also it's just like the one place that people go. So like when we did work for like Bothell City, just outside of Seattle, a number of years ago, and that was something they did really well there. Well, and they did a lot of other things well too, but like they really kind of owned that. And that was for their downtown, so it wasn't for their whole city, right? That's one of the challenges, like how do you do the website and have it be applicable? But maybe it's not. Maybe you actually do a downtown Great Falls site, or maybe you have the river district, maybe you brand the river district something, right? So I think doing something like that We're doing that right now with the city just south of Seattle, Des Moines, Washington, where they created, we came up with this concept with them, with the city council and the city manager, to put in this series of like steps leading down to the marina. And then we came up collectively with this name Marina Steps. And it just became this like this name that we used. And it was just made up, totally made up, you know? And that became then the name for everything, including the website, which they just went out for an RFP and got a developer that says, we'll see if it happens, but that says that they want to build a pretty neat mixed use development there, right on the marina. And they're a city of about 30,000 people outside of Seattle. Was hard to get developers' attention. I can tell you, went out to RFP, request for proposal, a couple months ago, and we had to like really work our collective networks to get submissions in. So it's not easy. This is not easy. I think that I say you don't have tons of developers and builders here, but you have good ones. And the ones
And
you
a lot of them are here.
and the ones you have, like from the conversations I had with a number of folks here, they want to do stuff here. Right. So I think it's also like locally here, figuring out how to make that work. My understanding is there's the gumbo soils or whatever you call them here, are kind of a big deal. I mean, if I could wave my magic wand, if I was, a person in politics, which I'm not, I would try to make that issue go away by incentivizing it somehow. Right? That to me seems like an issue. It came up in every single conversation we had 6 months ago, was the soils issue. I don't think it's I think maybe it's not as big of an issue as some people say sometimes, but I think it's a pretty big issue if it's coming up with every conversation. So that means, okay, like, is there a way for the city, county, state, I don't know, to help incentivize that issue? Because if that becomes just from a numbers, dollars and cents standpoint, if that's like a 10% hit in terms of cost, that might be your entire profit margin as a home builder. Like it might wipe out your entire profit margin. And I think people a lot of times don't understand that. They say, oh, you're making tons of money. Just do that. Well, that's your entire profit margin could get sunk if you have additional costs related to having to put serious foundations in that you didn't expect ahead of time. So that's like a local issue that there's no example for that I can think of exactly outside of Great Falls on the soils, because it seems very prevalent out here, right? And it's also like you don't always know when you're going to hit it. So I think that's something that I would if I was an investor here, I would want to see movement on that.
That's fantastic. Thank you. Jake, is there an online question?
Yeah, we've got a couple of them. One is
Hello, online world.
One is, Adam, how do you see models such as shared equity housing, like land trust homes or cooperative owned manufactured home communities or apartments fitting?
Oh, Sheila, hello.
Yeah, it's a great question. I mean, we're pretty agnostic in terms of actually the way that the housing can get built here, right? We think that there's lots of different ways to go about it. Those are all potential ways that I think we could see housing built here. Certainly the last one's pretty easy to understand, apartments. You're seeing that today, right? I mean, again, we see demand for that. We see a gap in demand. And some of that's not going to even just be traditional apartments. It might be single family rentals. It might be townhome rentals. Certainly affordable housing is part of that apartment conversation as well. Manufactured housing is probably more important here actually than a lot of other markets, right? So I think that we'll see, it's a building type that already exists here. In some markets, there's like a negative connotation when you say manufactured housing, but I think increasingly people are seeing it as a way to actually build offsite, right? And they're giving it new names, right? And then they're just redoing basically what's already been done with manufactured housing and putting down homes that have been built either partially or fully offsite and putting them on site. If that can save money and save time, then I think that's a great idea. Cooperative housing, land trusts, these are mechanisms to, for either ownership. I mean, those are probably more on the ownership side that certainly can work. Cooperative is a structure that can be really tricky. And you talk about financing is hard for condos. Financing is very hard for cooperatives, very hard. So I would be very surprised, honestly, to that question, if we saw cooperative, like a developer do cooperative housing out here because of the challenge to finance it. Maybe if it was very niche or something, but I think it'd have to be very small. So I think it's a great idea. I worked for a guy for a while that was trying to do that in Portland. I just know that the nuances of that are very tough. So yeah, I mean, I think there's a lot of room for different housing types. And that's what I mentioned earlier. Like, we still see the majority of housing coming in the next, at least in the near term, as being kind of what you've already seen. It's probably going to be more, it's going to be apartments, it's going to be single family homes, probably built on the periphery, but the demand's there for different housing types at different price points. And you need more types. We did that great question earlier about, someone in their 60s, let's say, or 70s wanting to move down. And what do you move down to? Right now, there's just not that many choices. So people get kind of stuck. Right. And so you want to, I think there's a big incentive. I think you should have a big incentive here to unstick people. Right. Get them out of their current housing and moving around. I mean, I wouldn't be surprised if most of you know, or if you yourselves have been in housing, in the same housing for 10 plus years, 20 plus years. And that's like, in a lot of markets, that's not what's happening, right? People move around. But what tends to happen is you get older, you do get stuck in your housing, right? So as you age, and especially as you own a house, nationally, people just stay longer in their housing. So you kind of want to unstick that. And I think get people moving around, free up some of the housing. Yeah.
Have you had success? Have you seen other communities that have figured out a way to demolish units or houses or buildings that to pave or to make way for new development?
So that question is, have you seen communities that have demolished or gotten rid of existing units, buildings, houses, whatever, to make way for new development? And before you answer that, just for our friends in the back, there are 2 seats in the middle here on the 3rd row, and there's 1 seat right up front. So I know it's a long time to stand, so just put that out there. Okay, go ahead.
Yeah, I mean, there are cities that certainly, through eminent domain and other methods, have taken down land, or have put funds, different types of funds together, let's say, and have acquired land, whether it's through a land trust or other mechanisms. It's not the typical way that we're seeing development happen, but I mean, like Bothell, Washington, like I discussed earlier, part of what made that really work well there is that the city ended up over time acquiring a lot of parcels. And so they could then come up with a strategy that met their terms, right? So that was what was kind of neat, right? They had enough power through what they owned. So whatever you do in terms of like knocking stuff down, I think is a whole different can of worms. But I do think that there's probably not, I don't remember there being like a lot of city-owned land here in the core of Great Falls. That could be another strategy, right? That the city could look at, like in terms of like acquiring maybe underperforming or underutilized properties, and then coming up with a maybe a bigger strategy, right? It's what we did also for this Des Moines, Washington project, because they own 30 acres on the marina, right? They could control that in a way. They could kind of control the destiny, right? Or at least come up with a strategy that again met the community's needs and wants, because it can be really hard when the community says they want this and then the private sector says, well, we're going to do this, and as long as it's under zoning regulations, they can do it, right? It may not always meet what people actually want. So yeah, I mean, again, if you could wave the magic wand, I think it'd be great to have like more city-owned property in the core and along the river, and actually have that, have some master plan that came through for that.
We have another online question here.
Yeah, I'm gonna try to combine a couple here. So back to your discussion about the charts with the blue squiggly line and how there's this conversion point of, we've got groups of buyers or owners that could presumably own more expensive housing, but there is none there for them. How have you seen that conversion take place, and will those houses that they're leaving, are they going to remain affordable when they are sold at the high prices the market is now demanding?
Yeah, that's a great question. I mean, I think that it's certainly possible that they don't remain affordable, right? I mean, I think that's a possibility, right? Is that the housing that people exit doesn't remain affordable. I think the reality is that when you introduce new housing that's a couple cuts above the existing housing, both in terms of just not just being new and looking nice, but really because of like floor plans and layouts and designs. I mean, that's a big deal. You go to most older homes and usually the kitchens are small and kind of towards the back, cut off from the rest of the house. Modern floor plans usually are not like that, right? Any builder in here will tell you that people buying a home right now, 500K and up, they want that flow from a kitchen into the, you know, the dining room into the living room, right? They want multiple bedrooms upstairs with everyone having their own bathroom typically. So those newer homes at those higher price points are going to occupy a different realm, right? You can't exactly control what happens to the houses that they leave, but the fact is you're going to have a bigger gap appear if you create that type of housing. And that should create that kind of that class B type of housing, or should allow that class B type of housing to hopefully remain more affordable than maybe it otherwise would. So it's a great question because I don't think it's a little misleading to say, okay, people just exit their expensive, or, they exit their home, they buy a more expensive home and then they free up a home and it just gets cheap. That's not exactly what market forces would tell you, right? Market forces would tell you, well, maybe everything rises, and that might be the case, but those homes that they exit might not rise as much. And I think that's part of the strategy there. And was there another part to that question?
The other part to that question, and that's closely related to that, is how does that out-of-state buyer affect that turnover? And then also those homes left behind, do we have any data on the remodeling costs of some of the older stock in where those houses tend to fall on that spectrum?
Yeah, I have I mean, remodeling costs are going to vary so much. I can't put a number on that. There's builders here that can probably shout out numbers, but I don't think they will. But I mean, remodeling costs are high. I mean, the same dynamics that are making it expensive to build new are also making it expensive to remodel, right? And there's a lot of demand for remodeling homes around the country, and I'm sure here as well. The impact of out-of-state buyers or out-of-state residents, because not everyone coming from out of state is buying either, right? I mean, there's a lot of out-of-state renters, especially with Malmstrom being here and also benefits bringing people from out of state. You have a lot of out-of-state renters. So you got to remember that. Out-of-state is not always, but a lot of times going to mean higher incomes, right? But not always, right? And it depends who we're talking about, really. But if that's I think that's what's meant by that question, is out-of-state equals higher incomes, which equals higher everything price, right? And I mean, I think there's certainly a truth to that. I think that this is going to be a market. I mean, again, the in-migration data that you can find today is still outdated. It's not going to really tell you what happened during COVID too much. But I mean, I think you can tell from on the ground, there's been a lot of out-of-state people moving into Montana and into Great Falls. Does that end now that people go back, like being forced to go back to work? It probably slows down somewhat. So, I mean, we're seeing nationally a lot of the big companies now start to make back to work announcements where they're requiring employees to go back physically to work 3+ days a week. I mean, this is happening a lot of the tech companies, but it's also happening a lot of like the banks. It's happening a lot of like the other companies you're not seeing in the media as much, right? That are maybe could be Fortune 1000 companies, but are not getting the same kind of attention. So I do think that puts that does kind of like tampers down like the ability for people to be maybe as flexible as where they live. But I think that our analysis around the country still suggests that a lot of the major metros are going to still see like 2 times the number of work from home that they did before COVID. So you're still gonna have a lot of folks that are gonna be wanting to and can work from home. And so I think that I would view that as a net benefit to Great Falls. You may not feel like it is sometimes because it impacts you, it impacts the community, and it feels like, oh, everything's getting more expensive, all these out-of-staters. Most of you come from families that are out-of-staters, right? We're all out-of-staters. And I think that like to put walls around and say like in-migration is bad is, I think it doesn't work, first of all. And I think it's kind of against what we're trying to do here, right? Because you're gonna have people flow to markets. The market forces are gonna force it. What you have here is enticing to certain people, right? I mean, again, low cost of living, relatively high quality of life. You have to put up with snow every month, from what I understand. -20. So that's really your barrier, by the way. That's your barrier. you have this natural weather barrier, just like Portland does, that keeps people away. Or at least maybe they come for 2 years and then they say, I can't deal with this. But I do think that the influx of out-of-staters is going to be a net positive because it is going to impact, it's going to help force this demand for housing. And by doing that, again, there's a lot of positive like externalities that come out of that. So I hope it's a positive. I know it's not always viewed that way.
All right, we are Craig Raymond.
Yep, so I just wanted to mention a couple things. Unfortunately, the state of Montana does not have residential tax abatement programs.
Not yet.
We have commercial, we have industrial, we especially have manufacturing of ammunition. So we do tax abatements for that. But we do have some other enticements that we can deal with. In some cases, a TIF district can be helpful, particularly the urban renewal areas, which Great Falls has 2. You have the downtown, then you have the West Bank. So sometimes that can help. And also, please remember, we have a revolving loan fund, a 0%, which is pretty cheap money, to support residential redevelopment in the downtown. There's some affordability period is primarily geared towards supporting low mod income, but has a pretty short affordability period, and then it can go back to market rate. So come check those programs out.
And we have the opportunity zone is located downtown and along the river.
Right.
So we have those maps available on our site, and that makes investment pretty attractive. Are there any other final thoughts before we move in? Yes, please.
I was wondering if you had any insights into the propensity of demand within what you call the commute shed area, or if you really just focused on Great Falls proper.
Propensity of demand in the community or Great Falls proper.
That's a great question. I mean, the numbers we talked today are mostly going to be around the county. The commute shed is certainly important. I mean, we see a lot of the housing production though happening closer in here certainly over the near term. So we don't have exact numbers for that. I think that's a good follow-up, right? In terms of like what percentage increase would we have for the greater commute shed, right? Because there's 12 other counties as part of that. But the short answer is no. I don't have a number really to put on that.
All right, anything else before we move along? Well, Adam, thank you so much. He shared his information and we'll share it in the follow-up as well. So if you have other questions for Adam, please reach out to him. And we're going to keep putting this slide up because if you are interested in being part of the actions that are coming out of this, please email or call Brett. We're going to have our first task force meeting Tuesday, March 29th from 4 to 5. We do all of our events hybrid, so you will have a Zoom option or an in-person option. All right, well, let's move on and let's start our conversation, continue our conversation with those that are providing opportunities. And I'm really pleased with the panel that we've put together to share some of the housing production that they are going to be working on this next year to hopefully get your minds going and the juices flowing here. And our very first one that we're going to start with is Brandon Prinsing with Lab Industries, and he's going to be via Zoom talking about the development for student housing to support our new medical school, Turo. So let's go ahead and we will get Brandon up here. Are you there, Brandon?
Hello, everyone. Good morning. Can everyone hear me okay?
We can. Yep.
All right. Great. Well, good morning, everyone. My name is Brandon Prinsing, and thanks for the introduction here. I'm an architect in Missoula, and I've been hired by Farron Realty Partners to help realize what we're calling the Great Falls Medical School Apartments to support the future nursing school and the Turo Medical School under development. And so I'll keep my my brief here to about 5 minutes, but I'll kind of share some highlights of this project. And super excited to work for Farron on this project and bring much needed housing to the Great Falls people. I am a Great Falls native myself. My brother works at the city, Dustin, and I was raised on a great wheat farm north of Great Falls near Carter, Montana. So I'm very well versed in Great Falls. Family's still there. So yeah, this is an image of the front of one of the buildings. Next slide, please. So project overview. It is a phase project. There's 2 phases. The first phase is 216 apartments. They're a mix of studios, 1 and 2 beds. And then there's a phase 2 that'll be 72 apartments. So I guess in all, there'll be 288 units in 8 buildings. There'll be a clubhouse as well. The clubhouse has a heated pool and spa, exercise facility, yoga, study rooms, a big great room with garage overhead doors, some study areas. This is a product that will be kind of catered to adjacent students, so you can live and work, or sorry, live and study close by, walking distance. In this clubhouse, there'll be a leasing office, mail, parcel delivery room, grilling stations. We've planned for a pickleball court and dedicated dog walking areas. So again, yeah, the connectivity to the Turo Medical School and the future nursing school there. So again, we try to plan, Farron had us plan a mix of units between studios and 1 bed, 1 bath, 2 bed, 1 bath, 2 bed, 2 bath, and at different scales. Between the studios are 550 square feet, and I think those different range of products will serve this project well. Next slide, please. So this is a site plan. The site is south of Benefice there. I'm trying to get my orientation on streets. It's down from the clinic. It's on 18th. It's right across from Central Catholic High School on a bare piece of land there right next to Turo. So it's planned to have sort of 2 ingress-egress points from the south and from the east. You see the medical school plan to the west and nursing school to the northeast. There's 8 buildings, 2 that face the street, 4 in the middle, and then the 2 up top you see in the purple perimeter there. Those are that's phase 2. The clubhouse is smack dab in the middle there. There'll be carports to shield not all parking, but most of the parking in front of the buildings. The dog parks will be to the southwest there. You see those trees. Stormwater management. All in all, it'd be a really exciting project. I'm really personally excited about the clubhouse area. We're trying to design the clubhouse to be very, we're trying to target this younger demographic. So there's, fun things, TV areas, pickleball, pool, that sort of thing. So next slide, please. This is a cutaway. It's like you took the roof off the clubhouse here, and you see the different spaces. So of course, you see the pool and the pickleball to the left-hand side, the pool patio around there. Within the building, there's a fitness area to the upper right. The study rooms are in the middle there. You enter from the bottom of the page into kind of a mail package room area where there's mail slots. The glass doors you see there is the entry. The club rooms to the left with a big banquet table, kitchen area, TV watching area, tall vaulted ceilings. The leasing office is to the lower right, and then some mechanical spaces. Next slide, please. This is a aerial of the clubhouse area. You're kind of looking northeast, simple form making, simple architecture. We're trying to kind of design it in a way that kind of nods to the agriculture agrarian kind of style that I think will fit well within the context of this site. We're trying to use natural materials where we can. The speaker before mentioned cost of building these days, and that's certainly the case. So we're trying to use our money wisely, and but still make a very nice product and I think it'll be a clubhouse that will be very much used. Next slide. Get to the end here. So I am presenting for Pat Cork here, and I have a few things I wanted to mention. You know, it will be a housing product that will, you know, all residents of Great Falls will be able to live here. There, it's not subsidized, but the focus will be on medical and nursing students. This is a front elevation of one of the buildings. You know, we're trying to use simple, approachable, you know, gable roof forms, undulating, and creating kind of an interesting visual pattern with different siding choices, balconies, so everyone has an opportunity to step outside and enjoy the fresh air. But also, you know, we still have to make the numbers pencil, so there will be decisions on, you know, this, that, and the other materials, structural, et cetera. We are trying our very best as a design team to buy a high quality product at an approachable price point. And as everyone might imagine, that's sometimes a little bit difficult, but as designers and architects, that's something I truly believe in, is that good design doesn't have to be expensive. It can be at all price points. And so we're trying to bring that good design. I have a mantra that I use a lot is a good design is good business. It's not that that will be lost. It's added value for sure. So next slide. I think that should be it. Yeah, that concludes my my brief little speech here. Thanks, everyone.
Thanks, Brandon. Third serendipity partner project here in Great Falls. You know, they have another one under development, which is harvesting up this spring over by TJ's. Our next presenter, our next developer, is Sherry Airy with NeighborWorks, talking about their new housing development. Sherry?
Hello, Sherry Airy with NeighborWorks Great Falls. Thanks a lot for everyone coming today. It's been great to work with Great Falls Development Authority and the Realtors Association to do our housing marketing study, our housing production study, because we really found it necessary for us to create our next strategic plan and where we wanted to go with some of our opportunities. So just to remind everyone, if you don't know about NeighborWorks, we really have helped create strong neighborhoods and successful home buyers. You know, we really think our vision is to help have some solutions for housing in Great Falls. And so I think our history has been able to help show that. You know, we started out as a very small, modest organization that just had 2 employees that looked at potentially closing down after the first federal grant came around. 42 years later, we can really tout our success in the community. 5,000 new home buyers in some form or fashion. We've helped them along that journey. 43 high school houses built, 500 distressed properties removed and in some form or fashion in our downtown area, and 400 new homes built or renovated, as well as 145 of the owner built homes. That really equates to a lot of money, $50 million added to the tax base, as well as our involvement in the last several years to helping rental properties. But in all that, one of our biggest goals has always been is that neighborhood revitalization, that neighborhood improvement. You can see there several of the homes that we removed, some of the blighted property, added back a home. Many of those homes do have some subsidy, but they're targeted at that workforce 80% AMI. And something that you might not know, because of the way our incomes are, we really do blend a lot of our everyday workforce into that 70, 80% AMI, as well as up to that 110%, 20%, as we talked about earlier. But you might not realize, whenever we don't have to put a subsidy in a new home or renovated home, what we try to do is we cap it usually at that 120 AMI. So we still are targeting someone that is going to buy that house and live in that house. When we have those that are considered market rate, many times, and maybe some of the realtors here understand, you know, you get calls from people that maybe want to buy that as investment property. Our target is trying to keep folks in homes and at that workforce level, especially if it doesn't have a subsidy in it. Some people might not realize we do try to do that as much as possible. But one of the things that we've also done in the last several years is we expand and look at the signs of the times. We've become a developer in many ways. And two of our biggest projects that have happened just in the last 4 years have been Meriwether Crossing, which was created for our owner-built program, but as well as finding partners to buy some of the other lots that we created there. The owner-built program is that through the USDA rural development. It's a wonderful partnership with the city and the county that we're able to help 10 families at a time build their homes and get into those affordable homes because of the sweat equity. As any builder right now realizes, that is becoming harder and harder for those families with those modest incomes to do, but we're continuing to do that program and we're looking at trying to expand that. The other program that we were able to do with is our Rockcrest Commons, which is a 9%, 4% tax credit opportunity. And so we're always looking for those type of partners to bring that housing to Great Falls. We have really seen a success in that with the income limits that we have out there. We have quite a long waiting list even for those homes. And again, that blend of incomes, you see a lot of folks in there that are considered some of those workforce folks just because of the nature of our incomes in Great Falls. So we're always looking for partners and providing affordable housing opportunities for our community. And so that's led us to continuing our development in Great Falls and purchasing of 123 acres that is called the Highland Development. It's on 33rd Avenue South and 13th Street South. We are close to the Highland Cemetery, and that actually was a part of that parcel that they owned. And so what we're hoping for is a neighborhood concept. We heard quite a bit about that in the study, and that's exactly what we're going for. So some of the facts to know is our primary purpose for purchasing this land is to continue that owner-built program. But obviously 123 acres is not what we're looking to develop as all owner-built homes. What we want to do is that land creates opportunity to create homes at all affordability levels. That's the small a, all of that bandwidth that we just talked about, that we need new homes in order to release some of that pressure of the housing stock in the community. Within our ability, we want to create that neighborhood concept, not just a subdivision. I think Meriwether in some ways was a test of that opportunity that we can create that. It's a wonderful mixed income neighborhood now. And so we want to expand that and see what are the new ways that we can bring homes to Great Falls with that neighborhood concept. And we do not expect to develop it alone, because obviously we don't have enough subsidy to do something like that. And that's not everything our community needs. We need that larger bandwidth of affordable housing at all price points. So we are going to be seeking partners to help us with that creative development. Where are we right now? We're currently interviewing our engineering firms that will help us take us to the next steps. One is subdividing the land and talking about the cost of infrastructure and bringing in the utilities. And two is the conceptualization of that neighborhood concept and what could that be for the next 10 years for Great Falls with those 123 acres. We want to continue our conversations with the city and county, very important about how to do that, how to bring that in, how to work with those entities to make it the best for the community, as well as the other stakeholders that you typically talk to through those discussions. And we're looking for partners. We're looking for the best way to bring homes to our community. And so we're looking for the opportunity for investment and partners. Broad strokes, what our aggressive timeline could be. We purchased the land last fall. Again, it's no secret of why we wanted to do the housing production study. We knew that this was the next big step for us, and we needed to have all of our ducks in a row in the research to help us develop that portfolio or that pro forma of what we're looking at. Spring 2022, we'll have our engineers in place. We're very fortunate to have some awesome people that have responded to our RFQ, and we're looking forward to having someone join us. Spring or summer, continuing some city and county agreements, those discussions, whatever that might look like. summer 2024 infrastructure work to begin. And spring or summer of 26 first build ready lots. We would obviously like to build earlier than that, fall of 2025. That is a very aggressive timeline. Some of it has to do with one of our needs for our owner build. It also has what are the opportunities where other funding sources that are out there in our community, in our city, in our county to help with water, sewer, infrastructure, those kind of things, because we need lots and homes now. And so this obviously does not get us to 123 acres in 2025, but it definitely gets us on the road to creating this neighborhood concept. So what else are we doing at NeighborWorks? Just to kind of say in our spare time that we're doing, we are going to continue to look for opportunities in the downtown area for infill homes, finding lots, removing blight. We will continue to look for opportunities with multifamily, whether it's renovating somewhere downtown or it's bringing another tax credit proposal in to the community in the next several years. That's much like Rockcrest. Now, our absolutely next project is the Bats Block Building, which we did have a 9% tax credit award. And so we'll be having that project start up at the end of this year, early spring, as we try to hit some of that very low AMI needs. If you saw on his spectrum of permanent supportive housing for folks who may have been housing insecurity or homeless issues. And we're going to ramp up our lending. Again, that bandwidth that we're talking about, that missing middle, many times our programs can help those folks into housing, down payment assistance, a second mortgage to help people into those homes. And so we're going to ramp up our lending opportunities because we see a need for the way we can help supplement some of our brokers here in town. I ran through a lot very quickly. Thank you for the opportunity.
Your contact information as well. They are seeking those partnership opportunities. All right, well, let's continue this momentum. I'd like to introduce via Zoom Roger Becker, who is with Vibe Construction, discussing their new projects. Roger?
Hello, everybody.
Hi, we can hear you.
Awesome. Great to see you guys and talk with you guys today with the housing conference here for Great Falls, and appreciate the opportunity to share for a couple minutes. I'm going to deviate from what I think some of my other fellow presenters have done with the slideshows and just kind of talk for 2 or 3 minutes real quick about our project in town, who we are. We're Vibe Construction. And then I can take a couple questions and just kind of offer up, just connecting with more of you fine folks in the days and weeks ahead. I'll tell you a quick story. My wife and I visited Great Falls for the very first time just a couple years ago. Just wanted to go check out Montana. We're based actually in Tacoma, Washington. So we flew over, spent the weekend in Great Falls, fell in love with it. Ended up a couple days after we got back, getting the property that we had started building on over off of 13th and 24th, right next to Castle Pines Drive, south of Benefice Hospital. Purchased it, got a okay deal on it, and began, trying to prepare to maybe build in Great Falls. So we worked on that with Big Sky Engineering for almost a whole year to get it entitled the rest of the way to build condos there. And then here this last October, just a couple months ago, we broke ground. So without my slideshow, like the other presenters, mine's going to be a show and tell from the standpoint. I'll be there this week, even though our main company offices are in Tacoma. I'll be there flying over tomorrow. I'll be there tomorrow, Thursday, Friday. So if you guys reach out or just want to come by the job site, you can come see what we're building. We're building and have started on 26 condo units there on about almost 3 acres there at 24th and 13th. So and the goal of that project, we designed ourselves the duplexes and triplexes you're going to see built there over the next number of months in-house. And then we designed them. Each of these duplex units and triplex units have 2-car garages. And they also have more of a modern diagonal pitched roof. And each one actually, they're pretty spacious from the standpoint of the number of rooms. So they have 3 bedrooms each, but also a opportunity to convert the 4th room to a either bedroom or bonus room. And they also have 3 bathrooms. So we fit a lot into every single one of these units. And you can kind of just see those spring into life right now. And we're even able to have a good friend of mine. He left a company in Seattle and moved over to your guys' fine town of Great Falls. And he moved his whole family, and now he's our superintendent there. And he got himself, Joe Hensley, who's our superintendent, got himself 20-acre piece of property with his house. And so, you know, our company, we're excited to build through this whole project. And we're calling it Ponderosa Place, the condo development there. We're excited to build through and finish up and sell one by one the different homes that we'll be building. But then we're excited to do more projects. We're excited to do, I would like to try to tee up 1 to 2 more multifamily projects, similar to the Ponderosa Place project in the days and weeks ahead. So would love to network, talk with any of you just about that and different maybe pieces of property or different other investment opportunities where you all see that. So just excited to meet everybody individually. Couldn't be there today. We'll be there, and I come over about once to twice a month myself. And if you want to check out our company's website, it's Vibe, V as in Victor, IBE, vibegc.com. And with that, I will open it up for a couple questions.
Any questions for Jason? I'm sorry, for Roger? Yeah, Christian.
There's one online. Can you again say the location of the construction project?
Great. Roger, could you say the location of the construction project, please?
Yeah, so it's right off of the cross street of 13th Street South and 24th Avenue South. So the cross street that's right there, if you just look up Castle Pines Way, that's the access into where there's a wall that encompasses the project. But it's right there at the corner of, as you're traveling south on 13th Street South, you'll see it right at the corner of there and 24th Avenue South. So the address, if you search an address there, it doesn't really come up if I give you an address. We're still building, and they still have to load all the addresses up once the homes are finished.
When will the homes come online?
Great question. So we are going to start listing probably last week of this month, first week of next month as pre-sales is the plan right now. None of the units are finished as it stands right now. We've got 2 buildings through framing with the roofs on, and then the 3rd and 4th duplexes are going up over the next several weeks, framing wise. And then we're hoping to have the first duplex done probably early June.
Great, thank you.
Yeah.
All right, well, thank you, Roger, for joining us. I know many of us. Okay, the next developer that I'm pleased to welcome is Jason Linseth with the crossing at, now I was just trying to figure out, is it the crossing in Milwaukee Depot, crossing at Milwaukee Station?
It's actually Milwaukee Station.
Milwaukee Station
Is
project.
what we're calling it.
Excellent. All right, well, please tell us about it.
Thanks. Like Jolene said, I'm Jason Linseth with Big Sky Select Properties. We're a local development group here out of Great Falls. And I guess you have video queued up and ready. So what we want to introduce here is the Milwaukee Station project. The site is right next to the Milwaukee Depot, pretty notable site. Everybody's pretty familiar with the location, I think, which we're really excited about. So this video, I think, is going to show you a pretty good visual representation of the project, and I'll just talk through some of the stats as it plays. So we'll run through this. So it's a 2-component project. We've got the multifamily portion of this is a 121 unit structure. It's a podium style construction, so it's a little different look than what we see a lot of here in this market. We've got a mix of 1 and 2 bedrooms, mostly 1 bedrooms, and then each floor has a couple 2 bedrooms. 5-story structure, you can kind of see it. We might be having problems getting the video to run, but that actually, there we go. This will help a little bit, okay. So you can see the multifamily side there. We have underground parking and each unit with a private balcony. Then the second portion, the commercial connector of this project, basically sits between the multifamily and the existing depot. So this commercial connector, the main level of this is all about eating and drinking. We've got a bar, 4 restaurant locations that'll all be counter-served restaurant locations with 1 large shared dining facility. We've given a lot of time, effort, and focus on the outdoor portions of this project, on both the multifamily side and the commercial side. We feel that with the location of this sitting, right next to Sight and Sound Park, and then looking over the river, a lot of our amenity focus has been with outdoor living and then with common area amenities as seen in the commercial connector there. So the one other thing on the commercial side, the lower level of the commercial connector is geared for a fitness, gym, and wellness facility. So that's the plan on the lower end. If you want, you can run through it again if you want, Jake. I don't know if it's if that's easy enough to queue up, but I guess a couple of reasons that we really like this project in this location is, number one, the location is extremely unique. It's a very notable spot in Great Falls. We feel that the access to recreational activities with the River's Edge Trail being easily accessible offers a lot for tenants of this project. And then also its proximity to downtown is another feature we really like. We think this is a win-win for both downtown and for the project. And feel like they'll play off each other well. The downtown amenities, which we all know, we're seeing great growth and rejuvenation in downtown right now and expect that to continue, which I believe will be a big amenity for tenants of this project. And then downtown businesses also would benefit nicely from the additional clientele. And then thirdly, the style of construction here is something that's a little different for Great Falls. So we feel that's going to be a fresh look, something very attractive and different here. Having said that, we've been in pre-construction with this project for a long time. We've gone through almost a 2-year process planning this and dealing with the challenges that we all know really well about over the last 2 years. So we're excited to say that we're there. We're finally to the point where this project is going to break ground this spring. So that is something that's happened here just in the short term. But yeah, we're pleased to be a part of the Great Falls development scene and very excited to implement this and hopefully have the projects in this market. So thank you.
All right. Downtown business owner, I'm super excited to have your project going. And this is a controversial statement, but there's more parkland. I'm just saying, I mean, they're in the opportunity zone. Anyway, I'll cut that. The next guest that we'd like to bring up is a local developer who has another project to announce for us, Mr. Spencer Wood.
Thank you. My name is Spencer Wood with Wood Engineering, and we have a development company called Discovery Meadows. I do not have really cool videos like Jason. You just have to go, I'll call it old school and go one slide at a time. So this is our development. It's 264 multifamily units. It is on the corner Well, it's right next to the soccer complex. So it's directly west of the soccer complex. On 7th Avenue North and 52nd Street. There's existing single family that we had developed previously to the west, and there's a cul-de-sac of single family here to the south and west. So it's a total of 4 buildings at this point. Again, 264 units. Next slide. So this is a rendering of what the first building looks like, except for the mountains. Apparently the highwoods look really big. So again, similar to what Brandon had talked about earlier with lab is, every unit's gonna have its own balcony, its own outdoor space. Again, this one is, secured entrance, key fob in and out. And then you've got 3 stories. Right now, the combination is 50%, 2-bedroom, 50%, 1-bedroom. We'll see as we go forward. Next slide, please. Again, actually, that looks like the Rocky Mountain front. You'll notice as we go through the slides, there's some different styles that we're looking at. And the unfortunate thing in the world we're living in today is you go, man, I really like that siding. And then you call the manufacturer and they say, maybe in 2024, we can get you that. And then you go back to the drawing board and you come up with a completely different rendering. So next slide. Again, I don't have a really cool video, so I just have to show you these. That's my last slide. So hopefully the plan is we've had some preliminary conversations with the city about this, and we're working through the process. If everything goes well, and we're able to break ground still in 2022, at least with the first phase. It will most likely be a 3-phase development. Any questions?
How do you find working with our city versus say Bozeman or Missoula?
Dating.
Rephrase that.
Be careful, Spencer.
How are you finding working in Missoula and or Bozeman these days? Is it difficult?
Yeah, it's extremely frustrating. We're doing projects currently in Missoula and Bozeman. I don't want to berate those folks. I mean, they're inundated, and it's an issue that it's difficult to even get return phone calls. I do have to say, in Great Falls, it is much easier to have conversations. They're very willing to work with you. Might not always like the answer, and that's fine. And as long as the answer is not, we've never done that before, so we can't do it again, or can't do that. And I never get that out of the city of Great Falls. It's much better than Bozeman and Missoula. You okay with that one, Craig? Checks in the mail.
Well, the reason I asked that question is because I'm constantly inundated with calls. Well, why don't we do like they do in Bozeman or Missoula? It's so much easier. And I'm here to tell you that is a lie. It is not easier to build in Bozeman and Missoula. And we need to get over that step and let that go away and realize that we are in the crown jewel of the state.
It is. It was interesting based on what Adam said, and we talked about housing prices. And so my opinion of seeing in Bozeman and Missoula is, unfortunately, some of the younger planners and younger reviewers for the city staff don't make enough money to live in Bozeman or Missoula. And the minute they have the opportunity to leave, they are. You show up, they're fresh out of college, they get their 1 year of experience or 2, they can make a little bit more, and they're gone. In Bozeman, we were working with a planner on a project, and it was the second senior most planner, and they've been there 6 months. And so you're educating them about their job so that they can review yours. Okay, any
7 to 50 seconds.
7 north and 52nd.
How many units are projected for phase 1?
48.
All right.
Hey.
Thank you. And I, for one, say you don't have to have a fancy video, especially when you're committing to 264 total units on the project. That's fantastic. So well done. The next section, so we're going to move into the demand. What we just heard from these builders and the opportunities is fantastic, and we applaud each and every one of them. Thank you. Thank you for investing in our community. But that's not going to get us to 4,500 units that were in the study. And this panel that we're going to hear from now is going to raise that number because of the job creation that they're doing in the private sector that will increase additional demand. So I would like to bring up Mr. Brian Patrick with the Great Falls Public Schools, Mr. Bruce Robinson with the Great Falls Clinic, Ms. Colette Brown with ADF, Mr. Forrest Ellinger with Benefice, Ms. Marlene Halko with Calumet, and on the Zoom, we have Ms. Patty Sulkin, the Provost of Truro. Welcome. We have some panel questions for you. And as I ask each one of you, would you just give a brief intro to your organization and your demand and then the question? Sound good? And then we will allow for questions then as time permits. So first off, I'd like to start with Mr. Brian Patrick with Great Falls Public Schools. So how many teachers did you hire in the district last year? And what type of housing do you think are best suited for your employees?
Sure. I'm Brian Patrick. I've been with Great Falls Public Schools for 11 years. I'm the business manager, so I get to handle all the money. And teacher-wise, we've hired 104 teachers last year. Of those 104, half came from Great Falls. 27 came from out of state, every state from Texas, California, Wyoming, Illinois, Massachusetts, all over. We had one hire from China. Wasn't necessary. It was somebody from the United States that went to China and came back to Great Falls. Housing wise, I'd say each person that comes in is their own story. If they've sold a house in another state, that's one thing. If they have a family, if they're a new teacher with a lot of student loan debt, they're probably looking for an apartment and then will eventually move into a single family home and then larger. So with that, I think what's ever affordable for them, and really, I think COVID set us for a little bit of a loop. We're losing a lot of staff. We're trying to find staff. We're having a shortage, not only in teachers, but in every area in our school system. So we're looking for people to move to Great Falls so they can work for the school system. Enrollment wise, just to give you a picture of where we've been, where we are. Looking at it, 2008, 2009, we had 10,410 students in the school system. This last year, our enrollment was 10,431. So there hasn't been a lot of change enrollment wise. The low during that time period was 10,109, and the high was 10,513. So pretty stagnant as far as student numbers, and that'll really drive the employment for our district. And yeah, I think we also saw a blip with COVID. We've got money to hire staff to deal with preparing for, and responding to COVID. And that money is one time only, it'll go away. But we've learned that we need medical people in the schools. Currently, we have about 47 medically related personnel that work for the district, 28 principals, 10 psychologists. So those are higher paying jobs. And the type of housing that we'll need would be the affordable rentals, apartments, single family. That upper end on the graph, probably not, as we look at it.
Great, thank you, Brian. Let's move to Bruce with the Great Falls Clinic. And you've announced recently your large expansion the clinic has. How many new employees are you expecting to hire within the next 24 months? And how has the current state of the housing market affected your current hiring?
Good morning, everyone. I'm Bruce Robinson, talent manager with Great Falls Clinic Hospital. Probably by the next presidential inauguration, we will quadruple in size at the hospital. We're adding operating suites, critical care units, more cath lab. If you drive by right now, you'll see a lot of building going on. We're pleased to say that we've been building all year round. You've probably read about it in the newspaper, seen on TV, but we're doing something that's never been done before with the hospital. So over the next 2 years, we'll likely be about 4 times the size. Projecting about anywhere from 150 to 160 new full-time equivalents or new employees. That's across the range from surgery all the way down to environmental services. As far as the second question, over the last year, we have probably lost 5 or 6 minimum that I know of, folks coming here mainly from the West, maybe Pacific Northwest, come here, they're interested in a job. This is at all levels from physician on down. They cannot find housing that I wouldn't say is necessarily affordable, but that suits their family's needs. And that could be anything from single family on down to rental. And it was quite surprising for me, but that's frustrating when people cannot come to a job because they can't find housing. So they have to return.
Great, thank you. I appreciate that insight. Colette with ADF, let's talk about how many new employees you intend to hire in the next 24 months and what type of housing you see the demand.
Yes, I'm Colette Brown. I worked for ADF for 7 years now, talent acquisition coordinator. We are actually working on building our staff from 135 to 200. And obviously would like to retain that. But like this gentleman just said about people wanting to come to the Great Falls area and wanting to find housing. We have families of 3, 4, 5. They want to take the job, they want to make the leap, and they're just having a hard time finding something that is suitable. So that's a challenge, probably on a weekly basis within ADF for our skilled workers and also admin positions and things like that, engineers.
Great, thank you. I appreciate that. Mr. Forrest Ellinger with Benefis Health System. What income levels do you see that are experiencing the most strain for hiring purposes? What jobs are we losing because we can't find appropriate housing? And what do you see would support the hospital?
Hello, I'm Forrest Ellinger. I'm the Executive Vice President and Chief Resource Officer at Benefis. I've been in this community now for about 8 years, so it's still relatively painfully new when I was trying to find my own place to live. So Benefis is the largest private employer in Great Falls. They employ about 3,300 people. It's the whole gamut. And I think sometimes you think about it as being the higher end of the wage spectrum, but roughly a third of those are somewhere near our minimum wage of $15 an hour. So, I mean, we are looking at all levels of housing needs. And I think, especially with the lower income people, convenience is an issue for us. A lot of them don't have vehicles, so they're looking for other ways to get to work. Historically, in 2021, we hired 754 individuals, of which 70 of those came from out of state. And again, there'll be the whole gamut of technical people with technical wages all the way up to physicians. Those physicians could either be brand new out of school with only a limited disposable income for housing to people that have been in private practice for a while and been able to move their families and are looking at that higher end of the curve. And I would say our housing needs are all across the board. And anything from townhomes to homes in that $500,000 plus range are equally sought after. We have multiple examples of times where we thought that we had a viable candidate that we wanted to bring, whether it's a physician or otherwise, and the fact that they couldn't find housing has been an issue, and we've ended up losing, which when you find those quality candidates, you just have to have that be the reason.
Very much so. And Benefis has been really instrumental in attracting our next speaker and the housing project that goes along with it that we heard about from the Farron Group earlier. But I'd like to introduce Patty Salkin, who is the provost at Churro University. And Patty, I'll let you introduce yourself. And then if you could just talk about, as being a new employer to Great Falls, the hires and the concerns that you have.
Sure. Good morning, everybody, and thank you very much to the Great Falls, Montana Housing Production Summit, to all of you who have put this together, because this has been an issue of critical concern to us for months already, as we're starting to recruit our founding deans and starting to then look at faculty. So I'm Patty Salk, and I'm the provost for the graduate and professional divisions of Truro University. And I'll be in Great Falls the first week in April for the week. And anybody who is around, I'd love to tour some of the new housing sites. We have started our construction. We hope that we will be able to open up and admit the first class for the summer of 2023. And the reason that I say hope is in higher education and professional schools, we're working around the accreditor for the medical school. And so at different benchmarks along the way, they come and evaluate the progress that we're making before we get final approval, kind of like the building inspectors checking on the projects along the way. But our goal, and we still are on schedule as of now, to be able to open up in the summer of 2023. We are currently recruiting our senior deans. We have our campus dean who is in Great Falls right now, renting somebody's house because she's having difficulty finding housing. And that's how all of this first got on our radar screen, that we were going to face the housing problem. With the help of Benefis and the presentation that you heard earlier about the student housing, that group is sort of taken care of the students. I don't think that we have enough for our third and fourth year students, and I'll explain that in a minute. But we really haven't looked at the workforce housing. And like everybody else on the panel, I think I can share some numbers with you, but I think we all have to remember that we're not in anybody else's checkbook. So we don't really know what their expenses are and what their housing situations are, where they are now before they move. We don't know their family situations, and we certainly don't know their student debt. But what I can tell you is that we expect from now to over the next 3 years to make at least 70 new full-time hires. We anticipate that these full-time hires, the majority will be from outside of Great Falls, although some may be from other communities in Montana. The kinds of jobs that we are hiring for run the gamut, from maintenance and facility staff jobs to IT jobs to standardized patients, food services, receptionists, administrative assistants, to the faculty. Some of the faculty will be in basic sciences PhDs who teach things like, biochemistry and anatomy. And then some of the faculty will be medical doctors. Our salary ranges go from, in the explanation of all of that, from low to high. The majority will range from $40,000 to $190,000. Some of the deans, which there are not a lot of, but will be at the higher end and a little over from that as well. But this is the majority of the 70. We expect, and we've had interest in the deans from people that are sitting deans at medical schools all over the country. We have one dean candidate coming out this weekend to look for housing with her husband. And so this timing of this is perfect because we really need things to talk about and to show them. When the students start, the way the medical school is structured, our first class, again, if we are able to stay on our schedule, and we're pretty good about that, summer of 2023, the first 125 students will show up. The hiring is going to go with all of the administrative support staff, and then the faculty for the first year plus the deans. Then in the second year, we're going to add another 125 students. And the same thing in the third and fourth year. So the medical school is a 4-year program. In the first 2 years, the students take their classes on campus as a regular college. And then in the third and the fourth years, the students go out into the community, into the hospitals and into the clinics to do their medical rotations. They periodically might come back to the school for some classes and lectures as they're studying for their medical boards, but by and large, they're out in the community. So some of them will be staying in Great Falls. You know, some of them will be going to other cities in Montana and surrounding states. But again, that's another, you know, there'll be 250 students always in the classroom when we're fully populated, and then 250 students always out on rotation. That's just for the medical school degree. We also at Truro have a master's program that we make available to students who might not be able to get into medical school right away because of lower MCAT scores. And we have a master's program that is a holistic application process that really is, like in New York, for example, we have it in Harlem, and it's targeted towards a lot of the underrepresented minority population. The same thing on our Middletown campus. In Montana, we hope that we will attract Native American or American Indian students, that we will attract rural students as part of our mission to serve the underserved. And those students might find a pathway through this master's program. The master's program that runs in our 4 medical school campuses right now has about an additional 70 students, and it's a 1-year program. About 50% of those students make it into our medical school, and the other 50% might get into another medical school, or we would help them track into other programs if they are interested. Once we get the medical school and that program off the ground, Truro has been speaking to John Goodnow and some others from Benefice, and we hope to be able to grow our educational footprint in the medical and health sciences space. We'll be partnering with the McLaughlin Research Institute on some significant research agendas, and you'll be seeing a lot of people from Truro who will need both permanent housing and also rental housing. And again, that mix that Boris talked about as well, from short-term rental, workforce housing, to housing at the higher end. And I think the sweet spot's probably going to be somewhere in the middle, like every other project.
Great, thank you, Provost Salkin. We appreciate that insight. Our final speaker on the panel is Marlena Halko with Calumet. And Marlena, Calumet has a very large expansion underway right now with a lot of specialized workers in town. I think like you talk about how many you brought to town for this project and the demand for housing that you've seen.
Sure. Hi, I'm Marlena Halko. I'm the HR manager with Calumet Montana Refining. I've been there for 17 years, and I'm sure everybody's been driving by Westgate and says, who are all these people? Well, they are working on a very exciting project that we have. We have a Montana Renewables project, and so they are here laying the framework for that project. And so right now, we have close to 300 contractors that are on site. They are working on that framework, and we have 7 new tanks that are going up. The biggest piece of this project is we have the legacy portion of our refinery and then the Montana Renewables piece. And so those conversions are going to start in July. And then we also have a planned maintenance shutdown that we do. We call those turnarounds. And that is also going to be through September, October timeframe through that. So basically July through October, you're going to see probably anywhere from 600 to 700 contractors in town. So what that means is there's an immediate demand for these existing contractors as well as the new ones coming in for temporary and short-term housing. So those are rentals that can be furnished, unfurnished. You know, some people need mobile home, RV hookup, power, you know, all the utilities. And then also, along with that, we have 25 new jobs roughly that we are hiring full-time employees with this expansion project. That includes anything from our entry-level positions as well as professional engineering type positions, which a lot of people with those skill sets don't live in Great Falls, and they might have that experience and work in a place down south. And one of our biggest hurdles, I think somebody mentioned it earlier, is our weather deterrent here. It's hard to convince those people that don't live in a place where there's 4 seasons a year to come live in Montana. But that's just one of the challenges we face. And then when people do move and relocate here, the housing has been interesting for us. And on the immediate term, they need rental housing before they can find that place to call their home.
Great, thank you. So, you know, and we've been doing good on time. We're a little bit long today, but I didn't want to cut off any of the dialogue and discussion. So we do understand if some of you have meetings that are immediate to go, but I'd like to open up for some questions to the panel before we do that. So questions for the panel. All right, I'll kick it off. So what would be the number one thing if you could impart to somebody that's looking at making it, and development is such a large investment. They're looking to make a development investment in our community. What would you advise? How would you help and approach that? Anybody want to tackle that?
Julian, I would just start by saying, if there was one common theme that I think you should all get from the people that are sitting up in front of you and from Patricia is, this is probably our single biggest limiting factor to growth. And so you heard, we're all up here, we represent the largest employers in Great Falls. And our biggest issue is we can recruit them, we can bring them into this town, but if there's not a place for them to live, they're not going to come. So we really need your help in partnering to solve this problem. And I think there's great things ahead of us in Great Falls if we can all work together to solve it.
Yeah. I concur. Thank you. Other thoughts? The panel? Oh, Mr. Raymond.
I got a question. What consideration have each of the companies put into developing your own corporate housing for at least temporary accommodation for some of these new employees? An example of that, my brother-in-law just took a job in Texas for Southwest Airlines, and they were able to stay, you know, in a reasonable apartment for a few months while they looked for permanent housing in the Dallas area. What consideration have your companies put into something like that?
I would say, as far as speaking for the Great Falls Clinic Hospital, we've already begun that initiative. Probably at the very end of last year, we began looking at some options where we would purchase and or lease homes for those coming in. They could live there, mainly furnished houses until they found something on a permanent basis.
Provost Salkin?
Yeah, so I was going to say that Truro is also open to that suggestion, but we have not yet found units that are available. You know, and I think there's not a lot of flexibility in the rental market at the moment either. And so new projects that are going up are going to be welcome. And the other piece that I wanted to add is the data shows that when medical students do their clinical rotations, where they do them, that's a good predictor. It's not a guarantee, but it's a good predictor of where they're going to settle. And so with a lot of our students rotating in the Great Falls Hospital in Benefice and in some of the clinics, we also think that there's that continuum for students that graduate from medical school also staying in Great Falls. And so we see the housing demand being strong for many years to come. So I would say all of these indicators are great for business and for your financial backers.
Thank you.
So for benefits, obviously the single biggest investment that we're making now is a partnership with the Farron Group. So that, while that doesn't help our employees, I mean, that's sort of where our energy has been tied up. And we think that in the long run, that's still important for Great Falls in aggregate. We also own the parcel of land next to Talos, the old driving range. And, you know, our idea at some point would be that that's a great place for housing. What that looks like or what we would do with it, there's no determination on that, but we know that's available at some point.
Okay, thank you. Yes.
Something that kind of caught my attention and for the short term was for Calumet and Ms. Helco. You said July, October timeframe, 600 to 700 new contractors.
So we, good question. So right now we have about 300 contractors that are here. And then we're looking at a peak between July to October total of 600 to 700.
How long are they going to stay here? Are we looking at just that time frame, or are they going to be here in the next year looking at our rentals also?
During that time frame.
Thank you.
Yeah.
Other questions for the panel? All right, oh, go ahead.
Ms. Halco, did you mention how many full-time jobs come with this expansion? Can you mention how many full-time jobs would come with this?
Yeah, so last year we hired 25, and that's what we're looking, roughly 25 entry-level type positions, and it'll be operators for this new renewable diesel conversion. There are additional professional positions, probably at 5 or 10.
Yes.
So my question is away from housing, but what transit needs do you need? Transportation, bus lines, et cetera, do you need for your employees?
I'll speak on that. So we're just right at the top of the hill, right outside of Great Falls. And we have people that relocate. They don't necessarily have a great means of transportation. They can't get to ADF. I've reached out to Blacktop 406 and arranged a little bit of hand holding sometimes, but I have arranged for people to get to work at 6 a.m. But there's nothing that gets up, and it's, you know, maybe what, a quarter mile outside of it's still in the city. It is a challenge. It would be nice to have the bus go up there for a lot of our individuals.
Our biggest challenge is, you know, we're kind of outgrowing Westgate right now, so we're trying to find additional parking and working on busing people to the facility to work. So we're just running out of room.
And benefits is well served with public transportation. So I don't know that it's a public transportation issue. I think it's still a challenge for employees in terms of convenience.
I think it's going to be a mixed bag with our students because I'm not sure how many students will drive from their home states to Montana with their cars. And so we are worried about where they live and their ability to get to grocery stores and hair salons, clothing stores, and other places. So seeing if there is something that can serve them would be great. And just my own personal experience from the times that I've been there, and sometimes it was a peak time, there was a lot going on in the city, but it wasn't always easy to get a taxi, and it wasn't always easy to get an Uber when I didn't have the rental car. And the rental cars are not always plentiful. Now that may change over time because I think that the demand is going to go up just with the school thinking about the number of students. And, you know, and at times when we have white coat ceremonies and other kind of commemorative milestones, parents and family members are going to come into town as well.
Thank you. All right, any final thoughts from our panelists? Well, we just greatly appreciate your time and your willingness to share with us today. So thank you very, very much for that. Well, and thank you, all of you, for your time and your participation today. So our next steps, we will be having the Housing Production Task Force first meeting. Please email or call Brett Doney, or myself if you're interested. I can also link you in there. This is good. We need now to build. So I call on all of you to form those partnerships and those relationships that will help us actually get to that milestone, that there really isn't the 4,500, but really, as we've heard, the demand is already out past that. So we need to build more housing. We are also working on bringing more people to Great Falls. And as you heard from all of our major employers, and I know that you're experiencing as well, talent attraction really relies on having a place for people to live. It is a big barrier in all of our industries. But if you do have jobs that you are looking to get out there, obviously we recommend posting through all the normal means. But for those jobs that somebody might move to town for, some of those professional jobs, we are sharing those in the hot jobs. So please send them to Lindsay at Grow Great Falls. Actually, if you can send to any of us, whichever email address you have, there are cards out back, we'll get them to the right spot. But then probably more importantly, if you have an employee that's coming and they're looking to make this move, they're looking at investing, and they have a partner or family members or friends that are moving with them, send those resumes to us. And if you want to be on the receiving end of those resumes, ask me, because we are sharing partner and family member resumes with their permission, of course, across Great Falls, so that we can help link in people to the workforce. Because sometimes a spouse or a partner or a child may be the defining factor for if that family can actually make the move. So we are happy to provide those services. And when we were talking about the permitting, my final thought here would be, we have a great city building department. Our permitting for the Turo project actually went, I think, 2 weeks. They were permitted because we needed to stick on that so they could be digging in 2 weeks, which is unheard of. And that's not to say that they're not busy. As you all know, they are inundated. I'm really pleased that Craig and his team have found different ways to move work around so that they are meeting our production timeline. So let's inundate them even more. Give Craig a call and get your building in the